Massive leverage with speculators built into this system, into the Comex ecosystem that have been flushed, massively flushed. And in fact, in silver right now, the commercials have their lowest short position, I think, ever. They flushed everybody out. And I think that really was the objective at the same time, to cover short positions so these banks in the United States can get on sides. I think that's what they're doing, and pickpocket, because the deliveries are continuing off the chart. They're continuing here in March, just like they have for the last 16 months before.
The commercial banks just pulled off a massive, highly engineered heist in the silver market. By violently crashing the paper price, Wall Street successfully flushed out retail speculators, allowing the banks to quietly cover their own massive short positions.
In March, we've seen over 40 million ounces. Oh, by the way, there was an article on X, and I forgot to write down who said it, and I'm sorry. It was very interesting. It said in the March 20th COT report, Commitment of Traders, JP Morgan closed out 633 short contracts of silver at the exact bottom. That's 3,165,000 ounces. In March, so far, there have been 12,532 contracts delivered of gold and 8,713 silver contracts issued and stopped delivered in silver. That was as of yesterday, according to Ed Steer. So if we take 8713 times 5,000, so far in March, we've seen over 43 million ounces delivered into Comex. And in terms of gold, we have seen 1,252,300 ounces of gold delivered.
Now, how many silver? What was the number on silver?
Of course, you asked me that. 43 million or so ounces.
And there was only 88 million last time that we were roughly on air.
Yeah, well, it's interesting. A lot of it's yes. I don't know exactly. Let's see. What did I say? I don't know exactly what the registered number is down to at this point, but it's being bled dry.
Right.
It's interesting also that we saw 2 million ounces of silver were loaded out in one day. That's according to loaded out means left the building. That was as of last Friday, I believe, according to Ed Steer. And he says 102 million ounces in January and February combined was moved out of the system, plus 26.716 million ounces so far in March, on top of being into the sixth year of a structural deficit. So when you talk about deliveries by the most sophisticated players in the world, including some of it leaving Comex, to me, price doesn't matter. One last thing I want to talk about gold. This is an interesting one. Where did that go? I did not want to do that. I think I just deleted that crud. Let me just see. So there was a very large bet made on Wall Street here. Let me find it.
Futures.
While I look for it, why don't you? Hang on.
Go ahead.
So this is about gold, and I find this one interesting. Very, very interesting. And I know you want to talk about Jane Street. So
no, I definitely want to talk about that. I want to talk about some confusion that I think I have, that a lot of people have.
Yeah. Oh, by the way, China came out and said 790 tons of silver imported in the first 2 months of this year. February alone was 470 tons, the highest monthly import volume ever recorded. This is as the paper price is getting smacked around, which I find to be interesting. The other things we want to talk about at some point was the exact total being delivered out in February, 38-ish million ounces, and the 38 million ounces that have left the ETFs. At the same time, I wonder if those numbers are closely coordinated. Hang on one second. I'll find that.
I had the same notes that you were talking about.
So anyways, here's the key point. Someone bought 11,000 2026 December gold bull spreads, 15,000 to 20,000. You buy the 15 and you sell the 20,000. They bought this after the crash in January. So this was after the price cratered. And that's the key point. Retail sold the panic, and a large player used the washout to build 1.1 million ounce massive position at about $3 million. They're betting that by the end of this year, the price goes between 15 and 20,000.
That's what I needed you to explain, because most people, I don't think, necessarily understand what the spread is, or the basket. Basically, that's what it is. They are betting that gold will fall somewhere between 15 and 20 million, 15 and 20,000 an ounce, and that's where they will profit.
Correct.
Okay.
You can never have a trade surplus over time by being the reserve currency. We need to export dollars, our biggest export, because we can't provide the world enough in the way of dollars through trade alone. So over time, these countries have to sell their currency to buy ours, to buy oil, and to transact global business as collateral, and therefore the imbalance over time becomes greater and greater and greater, and that's why manufacturing goes to places like Cambodia or Vietnam, who just joined the BRICS, or China, or all of these countries that have depreciated their currency so severely against ours, making manufacturing so enticing and hollowing out our manufacturing base. So unless we want to never have a manufacturing capacity ever, which is not good in the world of AI, and
we're losing enough jobs to begin with. It's what we should be having.
well, that's just it. And so, but you can't be reliant on the world for everything from aspirant aircraft parts and military components. You have to do it yourself. And I think we've had a great benefit for being the world reserve currency, but we've squandered it. And now we have, because now, when we were the reserve currency, everyone took our currency for their stuff. And then when they're sitting on all this currency, they recycle it into treasuries. That kept rates low, asset prices high, and the goods at Walmart cheap. But that has to work on trust. And the trust has been broken largely, not only in our monetary irresponsibility, our fiscal irresponsibility, but also in weaponizing against Russia. That's a line you can't cross.
This institutional panic to secure physical metal is driven by the intentional destruction of the US dollar. By weaponizing the global reserve currency, the United States has permanently shattered international trust, forcing foreign nations to rapidly abandon treasuries for gold.
Deja vu 0101. Can BRICS do something to stave off the geopolitical credible threats? That's a nice Lady Fortuna little.
I mean, the BRICS are doing things in a way that doesn't equate to the Western psyche. People don't understand it. They're very methodical in what they are doing, and what they are doing that is credible to stave things off is they're building rails that are independent of trading in US dollars. They will trade in local currencies. They are expanding the Shanghai Metals Exchange into various locations, various jurisdictions. So they will settle imbalances in gold through CIPS, the Cross Interbank Payment System, and through MBridge, which is operational, where you're getting more and more countries. And I think, this is, again, you can see why these countries would want to hold dollars is beyond me, or sell us their stuff for dollars, which we can create, ad nauseum. And forever, and then treasuries, which you can create currency and buy treasuries. The whole thing is nuts. I think when we cross that line with Russia, I think the cast, the die was cast, and it's just a matter of time. They're all deciding to slowly move away from settling in dollars, trade, and then settling in balance, or trading in dollars. They would rather trade in local currencies, settle in balances in gold. And you can see that by the amount of gold that they're all purchasing, and by the rails that are being set up, with the first vault being done or built already in Hong Kong, which is significant, because for gold to leave China, it has to come out of Hong Kong. They've made the yuan convertible into gold immediately without going into dollars. And the second vault is being built in Saudi Arabia, with more to come throughout the Belt Road, where Saudi Arabia can sell their oil to China for the digital yuan and immediately convert right now in Hong Kong through the Shanghai Metals Exchange in Hong Kong those yuan into gold and take possession. Soon it will be in their own backyard, and soon it will be in all of these countries, which will connect with not only the BRICS Metals Exchange, which will be built, but also all of the others throughout, Asia for sure, in Singapore, in Dubai, in St. Petersburg, in Moscow, all of these vaults in India, they will all be connected for settling imbalances. That's part of the plan, and it is happening. But I think where people get dismissive is that it takes a long time, and they don't they don't do things so fast and rush to only, incite the anger and ire of this current administration. I think the groundwork is being laid, and I wouldn't be surprised to, over the next few years, see it become very significant, but it won't happen overnight.
LBMA and Comex Shanghai repositories at historic lows, and the April contracts coming due soon. What are the odds of them running out of precious metals?
They seem to find a way to bleed down open interest continuously. I don't think you'll see that happen anytime soon, but we're getting to the point where it's getting serious. I think if it were going to happen, you would see, you could argue that the mechanics that we've been seeing where, we saw like 85% of what was delivered recently get purchased by a house account on Comex. And that house account, in essence, is one of the players who is the intermediary between the buyer and the recipient, or the buyer and the seller. But by doing it that way, instead of it going directly to the recipient, it gives them time they exchange warrants, they leave the metal unregistered, and it gives them time to work out a settlement off the visibility of the delivery report. I would think that it would happen. A greater chance it would happen in London, simply because they've been facing so much in the way of strain for the last year or two. Look, the Comex is an exchange, and they will do what they can to protect it. I think instead, what you will see, what do you?
My knee, I gotta stand.
Oh, Kevin is having knee surgery. What's going to happen maybe before you see an outright default or force majeure is a outright loss in confidence, where open interest disappears, where no one wants to trade with the big banks. And if no one's trading with the big banks, they can't push the price around.
So if let's just say that we do drain the vaults and Comex comes and says to these futures and options holders that they need to cash settle. Clearly that's a breach.
That's force majeure. Is
there a legal remedy for it?
No, that says they can do that in the contracts.
So if they do that, because again, we use the word trust and faith, right? Does Comex continue to be an entity that is going to continue to write bullshit paper going forward? Is it going to take one time and one time only, or no?
Well, I'm
not holding it.
I would say that you got to be out of your mind to trade with them if you think otherwise. There is a bill that was floated out, and I shouldn't even be talking about because I didn't read it. I just glanced at it. That has to do with the Silver Transparency Act or something like that, where they want to create a more equitable, transparent market. All I can say is that I think many of the sovereigns don't trust the Comex anymore as is, and they don't trust the LBMA. That's why India is doing what they're doing. So this is why you're seeing perhaps lots of deliveries, exchange for physicals. I don't know the exact numbers, but it's almost hard to believe the numbers, I guess is what I'm really trying to say. The numbers that they show you are hard to believe. We've seen 120 million ounces of silver be delivered and leave registered in the last 6 months. I'm pretty sure that's the number since September of last year. And, it's a situation where slowly, not only are you beginning to see metal leave, and a bunch of metal just left the eligible category the other day, which is it's the eligible category are the bars that are not backing, or the metal not backing the bars or the contracts that are posting. That's just metal sitting in a vault somewhere. Off it goes. You're beginning to see a slow offtake that ultimately would, I think, massively render the Comex untrustworthy. So I don't know how it plays out, but I don't trust them already. And if I don't, I'm sure a lot of the big institutions don't either.
Ralph Ramsey, U.S. floor from silver to $70 to $300. I read an article all in between. Andy, what are your thoughts? I know you don't answer.
I don't know.
How about this?
I can tell you, Bank of America says between 109 or 130 and 309. I'm going
to make it even easier for you. Do you think that there's a potential for gold to get back to 5,500 by year end?
Me?
Yeah.
Yeah.
Do you think that there's an opportunity for silver to get back to triple digits before year end?
I think so.
And then that answers the question. I don't think that you need to go, again, you can't get to 300 without getting to 100 first. So just get back to 100. I know that's how I look at things. And for me, I did the same thing when silver was at 20. I looked at it and said, wow, if I double, it's 40. And right now, if it doubles at 40, it goes to 80. And that's it. So, and right now, what? We're at $70.
It's up $70.
Yes.
Yeah.
The futures are there. So
What's silver up?
silver's up 60 cents in the futures right now.
Okay.
So, and the spot market actually closed, I think it was roughly, we're at about 70 and a half. So we're still sitting about 50 cents higher on spot than we are in the futures market. So backwardation is still in effect.